Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday, and it is January 5th. This will be our chart lesson for the day, and it's a range day today. We started out in this blue channel, had a little failed break lower. Then we actually failed out the upper side, came back in the channel, made a higher low. So at that point, you want to get that measured move. So there was two ways to find the measured move today. One, measure this first move and then start it from here. And with our new measured move tool, it makes it real easy to do this. You just click here and get that measurement, and then it creates your other line. You just put it at the low, and that gives you your measured move right there. And you can see we came real close. The other way was we measured the first part of the range here, and then that gives us this part, which is equal. Move it over here, and that should give you the upper part of the range. For some reason now it's a little bit different. I might have made it a little smaller or something when I clicked on it, moved it or whatever. But anyway, that gives you, that was the way I started. But once we started higher here, of course, you want to measure this too. And you'd have been in the ballpark with either one of them. Notice we got up here. This one was almost perfect. And then we uh, sold off from there. So either way, you would have got you in the right ballpark. And if you would have used that, the first one, you would have got the majority of this move here. And if you waited and used this one, you might have got an extra, point out of it or a few ticks anyway. So both of them turned out pretty much the same. So that's really what we're looking at as a range day. And so that's how I got this line here early this morning. I just measured the first part of this range, moved it up, and then I got this secondary measurement by measuring the actual leg up. So you got two legs up there now. And that'll generally give you your target. A lot of times it's amazing how many times it'll be exactly to the tick, but it'll get you in the ballpark. And what I will do if I've got a runner or I'm trying to manage a trade that I'm going to try to get the measured move out of, I'm going to exit a little bit in front of my most conservative line, which will be this one. And I'm going to exit maybe 2 or 3, 4 ticks in front of that, a point maybe. And just to be sure, and yeah, you may not get the entire full move, but you'll get most of it. So it's almost impossible to get an entire move. So if you can get all of it but a point or two on a move that is basically, this moves 36.90 to 37.30 maybe. So that's about a 40-point move. So if you can get 35 points out of a 40-point move, you've done really, really well. I mean, most people tell you can't do that consistently, but if you know how to find these measured moves, you can get close. So anyway, I'm going to try to get this posted a little earlier today. I'm still a little bit behind. Also, just real quickly, there's still a few periods where the website is running a little bit slow. We're still having a couple of issues with some of the updates we made, but I think the biggest problem are we've got some outside influence on our website, and I think that's causing a lot of it. It comes in spurts, and that's when every time it does, it seems to be associated with the outside influences, and that's about all I'm going to say about it for now, because I don't want to make it a bigger deal than it is. But that is 90% of our problem, I think, and we're slowly working on that, and hopefully we'll have that fixed before too long. So I want to be careful what I say publicly there about that. But anyway, we got some outside influences affecting our website. And it's nothing new, it just seems to be worse lately. So anyway, let's back out here, talk about the trades. There's not a lot of them today. This was, there's enough trades here, and there's some pretty good ones, but there's just not a lot of them today. Um, you have to catch these bigger moves early, and if you don't, they're hard to get in because they just move so quick and strongly, and you just can't enter a strong trend way away from the EMA, because as soon as you do, you know what's going to happen. So anyway, let's back out here enough to where we can see all this a little more clearly. Sometimes I forget to back out and you guys can't see it, guys and gals, so I'm going to back out a little more here. But anyway, 7 o'clock came just after we bounced off these lows here, and that pretty much set the lows of the range. We bounced right here. So 7 o'clock came right in here. And this made a little bit, actually we made a little lower low, but either way I would count that as a double bottom. And so you got a first entry and then a second entry here. And I marked this one green. It's really close. You could argue for it to be red, but I'll explain to you why I marked it green. Of course, we got this tight channel working down, and we got our first close outside of, but technically we got a close and new low right there. It's only by 1 tick, but it still fits the rules. But when we come back up here and we get that first entry, I mean, there's always a chance we turn down here and then go back up, because we just came out the low, so we're probably going to head back to the highs. The problem is you don't know exactly when. And so when you get this second entry short with a really bearish bar, especially when it bounced off the EMA twice, we're probably going to try to go down for a retest, or at least retest the lows of the range again. And there's plenty of room back down here, so I like that one. And like I said, it's close to being red. The only problem is this is a range, and it's in the center part of the range, and that's where you get more failures. That's where you get tripped up and trapped and everything else. So you got to be really careful. But I tend to like that one. It's really such a bearish bar, and it did break higher first. And you know, the average person doesn't read bars or anything like that. They just see prices going higher, and they think it's time to go higher. So you're going to trap some people right there. And if anything, you'll probably get a scalp. We're probably going to test this low. I was a little surprised to see it break out, but didn't surprise me that we tested lows. That's pretty common. So, and of course, we had the failed breakout here. And generally, when you get a failed breakout, especially that far away from the EMA on a first entry, second entry long, you want to pay attention to that. Technically, this is not a second entry because your last new high was here. I take that back. We did break higher here, so that's still a second. It looks like a second entry, so it's probably going to act like one regardless. But I forgot we did break higher right there. So technically, this is an actual second entry long. So it's not even one that's just probably going to act like one. And being that far away from the EMA, you're probably going to get a scalp here. Most breakouts are going to fail. And then if you get a second entry long to boot on top of that, with a signal bar that strong, that far away from the EMA, the odds are on your side. So those are the kind you often catch. This move here, today it turned out we were going to push one more time lower, but and unfortunately you didn't get that set up this time, and look at it go. But that's why I like to take the chance on a good failure that fails out of the lows or highs of a trading range, because it often marks an important low or high for the day. And you can see that was a very important low, because we ran, I forgot what I said it was, 40 points or so up after that. So you want to pay attention to that. And so I like that entry. And of course we did push down one more time, and we didn't get a true reversal, but we ran up here and we start going sideways, and we ticked lower here on this bar right here, which probably going to trap some shorts that don't realize what's going on here, people that don't understand how price action works. And it instantly turns up. So I like going long on an engulfing bar right there. I don't know if I would wait and go long on this big bar, but this bar is what, four ticks, I think. Come on. I just can't get my finger to hold. 6 ticks. So it's still pretty low risk, and it breaks lower, then turns to go. So I like going long on a buy stop right there. And somebody asked me today, when do you trade a engulfing bar and when do you not? Well, that's almost impossible to answer, because it all depends on the context. Understand this. If you haven't heard me say this, make sure you hear this. We are not pattern traders. We just use the patterns to time and narrow down our entries. We're trading based on what the chart's telling us, and that only. And notice too that is right here at this key entry point. So we never really get a close outside. What I'm talking about is this little yellow channel. You can clearly see that trend line working up through there, and that's right off that trend line again. So that's another reason I like that one. So we technically never get a close outside that trend line, so it's still valid. And you see what the kind of move you get out of that. So if you take this trade, you get an easy runner, and you can ride this thing all the way up. I mean, there's no correction really here at all. I mean, this is one of those strong trends where the corrections only go sideways or just very tiny. And when you see that, that's a strong move, and you can see how strong it was. It broke, failed out the other side. So I like that entry. I marked this one, and I didn't really know how to mark it, so I just kind of made a purple arrow there just so I wouldn't forget to talk about it. This is a strong trend, and this is definitely off. The problem was you wouldn't really have this key entry point yet. It's kind of hard to draw it off the highs. There's nothing to really verify it off the highs, so you're really just taking a stab in the dark. But what I did was there's a little, oops, wrong line. Well, I got the wrong one again. Let's just use the channel. As you can see that trend right there, that's off that same trend line. And that's really how why I like that trade. And so if you saw this and you like that trade with this much room left, the only problem is you're already almost back to the upper side of this and it keeps turning down. So the odds are, though, it can't get back down to here because it'll catch this side, and you still got a little room to go there. So you may take that trade. It's very aggressive, but I just wanted to make sure I didn't forget to talk about it and kind of show you that. I like that trade, even though normally I'm going to tell you you don't want to enter that far away from the EMA, but look how strong that move is. And this is just way too steep, and this is more of a 45-degree angle. And so that we could have kept going right on up that same trend, but guess what? It actually fires off again here, especially when it verifies that trend line. Notice it touches it here. That gives you your two swings, and it touches it again, and that confirms it. But that's still hard to find. So, and by the time you do find it, this is already moving higher again. So the only way you see this probably is if you know to draw this slanted channel. So I like that trade. It's aggressive, but it'll often pay off. And then of course we break out the top. We do come back and test it, but that far away from the EMA, don't trade a breakout pullback. Just don't do it, because most of the time it'll fail. We do go higher here, and it is off that same key entry point, but with it just being a first entry and that far away from the EMA for that long, I mean, this one's pushing it. This one's just way too far gone. So we run up, and of course now we're going to fail, and then you try to go higher once, twice, and look at this nice bullish bar. But look at that congestion, and it breaks higher and fails instantly. I like going short there just to try to ride it back to the EMA. Nothing more than that, just for a scalp. And that's a fairly easy scalp. Just the key is, do you have enough room back to the EMA to scalp out? And we do. And thus we come back, and we don't. It's the first break of this, so we may still try a new high, but I don't think you want to enter right here. There's a little bit of support, but I'd wait on something new, something better than that, a higher low or something, and we just don't really get in. We start going sideways, and then we come back down and bounce one more time. Again, not a very good setup. We finally make a new high. I'd wait on a lower high, which we don't get till here, and then that's right in the middle of the range. Definitely congestion, so very questionable. But finally it runs up again, and it fails out the top. And actually I got this is your signal bar right here. I had it over the wrong one. Now I can't get it, grab it again. But that's your signal bar. So when this bar broke lower, I like going short. You might wait on this lower high, but these lower highs are, by the time they come, this channel is just too tight. You almost have to enter here to have enough room and to make sure you're not in the middle of congestion or something like that. So Uh, but anyway, that's basically a triple test too. Notice we made the high, we test it once, we test it twice. And look how far we are away from the EMA again. The EMA acts like a magnet. When prices get far away from it, they pull it back. And when it gets to prices, it tends to push it away. And that's kind of how the EMA works. Now, when you start going sideways, it'll flip back and forth above and below. And so it'll work a little bit different. This one was tempting as heck right here. But right in the middle, with all that congestion, you see what would have happened if you look at some of these others. You probably would have, and this time it works though. But finally we had that little failed breakout, and here we are again. Remember, I always tell you those turn out to be important highs and lows, and guess what? Look at that huge move down. If you catch this, you probably get another runner. You ride this all the way down, and I'm just telling you, that's why I like these breakouts. So anyway, I'd skip that one. As good as it looks after the fact, you just have to skip it. And then, of course, we come back to the trend line again here, but no setup. It's too congestive. That bar is too bullish. This is an inside bar. We didn't break higher here. We get a lower high, same thing. No signal bar. You could look at this as a failed second entry long. But we've already had a break here and a couple of legs down now, so anything from here on is real suspect. We run down here, we bounce, and you'd want a higher low here, and you don't get any. If you entered here, you can ride this, but this is very dangerous here. It's very low risk. After the fact, seeing it's only 5 ticks, being that far away from the EMA for that long after a break and more than a couple of legs down, you might take that trade. I didn't think it was worth risking in real time, but when you look at it after the fact, you think, hey, maybe you want to gamble there. But it's definitely risky. Great move. Then we run back, and that's the thing too. A lot of times you're still going to try to make another low here. And it could be that I've got this trend line off a little bit. That was another thing to think about there. I believe that I've got it right, but you can still see, you could argue that that fits. And then that kind of explains why we bounced right in here. So something else to think about. And if that's the case, we're still going to go lower. But notice we made this big leg up in a correction, and you think we're going to make another leg up. And instead, we're going to make another leg down first. So you got 2 legs down here now. And of course, if you measure those, we didn't quite get a measured move. We missed it by a little bit. But you got a lot of support starting to form across here. And once again, this is right in the middle of the original range. But notice you get that first leg down, and then you get a 2-legged correction. So that's a second entry short, very bearish bar. And if you draw your trend line right off those first couple of bars there, it fits really good. It comes back in right here. It looks like a really good legitimate channel there to me. And I like going short there. Second entry short, looking for that next leg down. And again, we find that support there, but we keep pushing, but prices finally go higher here. But notice you made that low, and then you made a higher low here. Mark this one green. It is congestive, but we've already had a break here now and a new low in place, and this is a higher low, and look how far away we are from the EMA, and look how bullish that bar is. If this is over, we may get that next leg up that looks like this one now. So if you measure that leg, I mean, that puts us right back to the top, and look where we go. We end up going a little higher before we corrected, and then we even went a little higher than that. So that's a nice target to shoot for right there. And that's why I like maybe being a little aggressive right there. And of course, we just go sideways here. I don't see any reason to enter right there at the highs. This was the highs of the original range, and it's acting as support and resistance back and forth. There's just no way to really know what's going on there. So just don't do anything. This is one of those instances where, hey, I can't tell what's going on. We're flipping above, below, above, below. It ends up breaking higher, but then it comes right back again, and we're doing the same thing again. So the market just kind of lost direction here. And so you got to be real careful. But finally, you start making higher highs and higher lows. And what I like this one for is notice how many times we tested that support right there. And then we broke higher and came back and tested it and made a nice bar right there. So even if this is a range, it looks like it's expanded now. And I'll just show you kind of how it looks at this point. Actually, I would have had it tightened back up to right there. And you can see that now. And so I like going long there just to hopefully maybe ride it back up to here. This thing just keeps going. And you would have probably got a runner there. And then we come back and confirm. I drew the trend line really off those first two. And that's another reason I like that, because you got the trend line, the support and resistance of the original range. You got all that support right there. Pushes up, it comes back. Unfortunately, you don't get a setup right here. It is a second entry long right there, but it's kind of an engulfing bar. But it comes back right here and gives you a higher low on a nice bullish bar. You're going long at the high, but because of this yellow channel, I like it. We got a long way to go here. Plus, you got the blue trend line. At that point, I thought it was more like this, but you can see it's really, that's it right there. And you can see the midline's working all the way. So I like going long there just because it confirms this yellow trend line and then it confirms this blue trend line both. And again, you'd had a nice runner here. Runs up, and of course your target's up here. There's there were a couple of them up here. And then you pull back 2 legs back and real small bar. Normally I would tell you you'd probably skip this, but at 4 ticks, being off that blue trend line that's been holding all the way up with 2 legs back that are almost sideways rather than down, that's still, look how strong that is. That's still a strong move. And so you'll probably at least get a scalp out of this. You'll at least probably come back and test these highs. Of course, it makes a new high and then it turns down, and that takes us into 2 o'clock. This one would be tempting on most days if it wasn't so late in the day. But notice you're coming down first entry, and so this actually broke lower, I believe, and turned and went out the other side. So that's a second entry long on an engulfing bar. Even if you waited to that close, there's still plenty of room back to the EMA. If you didn't trade this on the engulfing bar, I'd probably wait till a higher low, and then this way after 2 o'clock. Still would have worked. But that's what I saw today. Not a lot of trades, but there were some really good ones. And again, pay attention to these failed breakouts. Now, you got to, like I said, you got to be careful because it's similar to counter trend trading, but on range days, it's not really counter trend trading. It's just hoping you get your timing right. And you might miss a couple of these, but if you can just catch one of them with a runner occasionally, it's going to pay for you to be able to take a chance on those failed breakouts occasionally. And if you get 1 or 2 wrong, you lose a couple of points. So what if you made 20 points or 10 points or 15 points on a runner off one of these? I mean, you're almost guaranteed right there to get that whole move because it never corrects until way up here. So you could get almost that whole, I mean, that's like a freebie right there. It's a shame we couldn't get in down here, but you still could get in right here. And you just get that free move up. Now here, I doubt I'm going to hold on in through here. I'm probably going to exit. But if you catch one of these, then there's you another chance. Or if you catch this one, I don't know if you'd hold on through here. I probably wouldn't, but some of you are better at that than me. So I'm not a swing trader. That's what led me to the scalp and run strategy, because I don't have the stomach for watching There's nothing I hate worse than to enter a trade and watch it have, a couple $100 to 500 to $1,000 worth of profit and then back up trying to get a little more and then lose it. I can't stomach that. That's what led me to this. I started saying, hey, if I just take my profit, I'd be making money. And so I started taking my profits a lot quicker. And next thing you know, I was making money. So that's kind of how I stumbled on to the scalp and run, because you get your scalp and you take your money, but you still get a chance to get a bonus check if you manage it properly. And no, you won't get a bonus on all of them, and it's frustrating sometimes, but when you catch one, especially on a day when you get moves like this, especially on these failed breakouts, because these are like gimmies almost. Um, so anyway, I'm going to wrap it up. We're already 25 minutes and it's late here, and I know I want to get this up. So I'm going to wrap it up. We'll be back again to do it tomorrow. Hopefully I can get back on track and start getting these uploaded a little bit earlier. It may take me another week. But anyway, I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.